Hello, Mavericks. This is Rob Reinhold. It is the middle of June. I cannot believe it. And boy, it's getting hot here. I'm joined by Mr. Ankit Sharma. I'm guessing it's not as hot up in Canada. How's the weather up there, Ankit?
I must say, I won't say it's moderate. It's still chilly overnight, and I now have to do the conversion with Fahrenheit. Like it's about 20 degrees. Let's do the math here.
66.
But yeah, it's not 66. So we're about between 66 to let's say 76. So pretty decent weather. And that's typically our summer. So
Yeah, and what are you going to do with your 6 weeks of summer this year?
I know, right? Like it's all the preparation, all the patio stuff, and then next thing you know, you only have a very limited window to use it. So it's all about, that's why we try to make it count whenever you have a good weather here.
Very, very true. Very true. All right, well, let's jump into the markets here. We had a week that was like half and half. We had half the week where the markets were tame. They were volatile, but tame. And so Monday, Tuesday, Wednesday, we had 2 days up, 1 day down. And then Thursday, the selling flowed in, and it was relentless on Thursday, and it was relentless on Friday. And so we broke down from our little channel, and we're now back down to the May lows. We are right there. We'll take a look at the charts, but we're right there at major support. Next week is potentially going to get even uglier. We did hear from the RBA. They hiked rates by a larger than expected 50 basis points. Expectations were for a quarter point. They went 50. So we're starting to see central banks around the world get much more aggressive with their policy statements. And we had just cryptos remained weak. We've talked about how little we like cryptos on the long side for at least the last 8 weeks. They just look terrible. And I'm telling you, at this point, there is no bottom. There will be a bottom at some point. But at this point, anyone who's trying to call a bottom, it's foolish. It's absolutely foolish. So there's a company out there called MicroStrategy. And MicroStrategy invested all of their profits over the last 3 to 4 years in Bitcoin. So they just put their profits into Bitcoin. And their stock did really well when Bitcoin was not doing well. And now it's crashing. This CEO who's running a software company, he's on YouTube every day saying, this is the bottom, time to load up. And I'm thinking, oh man, this guy's feeling some pain. There is no reason whatsoever here to buy cryptos. There is no bottom. Once there's a bottom, go ahead and buy them. But right now, it is bottomless. There is no support that is holding. There's nothing other than hope to keep these things from falling more. We got the CPI report. Actually, let's cover Canada employment change first. Better than expected. Definitely the CAD was one of the stronger currencies this week. But the big report, US CPI, 1%. 8.1% year over year inflation, the highest since 1981. This killed the market on Friday. The market was kind of hoping for a good number. We have heard people come on the TV say peak inflation. That was peak inflation. Well, guess what? Obviously, we are not at peak inflation yet. So let's take a look at what happened in the market so you can see the equities down 4.5%. That's a really big fall. And take a look at the chart because we were flat on Wednesday. We were basically flat on the week on Wednesday. So this 4.5% down, it all came on Thursday, Friday. A really nasty move. You can see we are right at lows. We have 2 lows there in May. We're there. Here is the thing about support and resistance levels. The more these levels get touched, the more likely it is they're going to break. And so this is just not good. If this was a major support point back here in May, if this was a major double bottom support point, so here's the neckline. This is where it should bottom. We should not come back down and test this support again. And we are, which is telling me it is much more likely to break through it than to hold. So I'm looking at equities next week, especially early next week, Monday, Tuesday, as being very, very ugly. I think we are going to have some ugly moves here next week. Cryptos down big. There's really not much to say about them other than they are absolutely terrible right now. If we take a look at foreign currency returns, the dollar was strong, and most of that came at the end of the week. As interest rates shot up in the US, the dollar participated to the upside. There are a few banks that are out there saying that we are going to get a 0.75% rate hike on Wednesday. We'll talk about that here in a little bit, but the expectations of interest rates were already high. Now they're even higher. And so dollar took off. You can see CAD had a decent week, and Swiss franc and yen were weak. Now this is a strange thing, because we all know that when there's a risk-off move, you see things like the Aussie and the Kiwi weaken, which is exactly what we saw. We see stuff like the dollar strengthen, and typically we see the yen and the Swiss franc strengthen as well. They didn't strengthen. Now look, they did bounce a little bit in the last 2 days. So if you want to take a look at what's happening right here, right now, yeah, we are seeing some bounces in yen specifically, but for the week, it just didn't perform well. I'm not going to talk any more about cryptos. They're just terrible. They're absolutely terrible. They go down 5 to 10% every single week. So let's look specifically at these equity markets. We already took a look at the SPX. Let's take a look at the VT. And we are moving down our rankings from a 0 on the markets to a -2. So -2, we're not at the most negative we can be, but that's pretty bearish. If we take a look at the VT, this is the World Total Index. You could see it's faring better, but it's not great. It's not great. We still broke below this neckline. We should never have broken below this neckline. If this was truly a double bottom, then we shouldn't be below this line. We still have a little bit to go, but again, it's performing better than the US markets, but it's still performing terribly. And the cryptos, and this is a reason why, again, we are so bearish on cryptos. If we could be bearish -8, -10, whatever it is, we had a 30% fall, and we've now had about a month and a half long low base. And we're breaking down. This is just such a negative chart pattern. The fact that you have a 30% drop and you can't bounce, you can't put together more than 1 or 2 days on the upside, and then you've got just selling the whole time. It's just super, super negative here. So we do not like cryptos in any way, shape, or form. Next week, the calendar is busy again. We have the FOMC on Wednesday. We've got Bank of England and the Swiss National Bank on Thursday. So let's talk about this press conference. We know we're going to get a rate hike. And for the longest time, the market has been expecting 50 basis points. And that was pretty much a guarantee that was going to happen. Now remember, the way markets move is that they price the market today based on the expectation of what's going to happen tomorrow and over the next couple of weeks and months. When those expectations change, then the prices today change. And that's what we saw today. We saw this expectation that, okay, well, the Fed's going to raise 50 basis points, and they're going to do it every meeting for the next couple, and then we're going to get up to 2.5 by the end of the year. And all of a sudden that changed today. We are now pricing that we're going to be at 3% by the end of the year. And so everything needs to be repriced because the future outlook changed. And that's why we're seeing equities fall. That's why we're seeing this big risk-off move. This meeting next week, 50 basis points was baked in. It's no longer baked in. And so we now have some people out there calling for 0.75. So here's the question now. Here's that expectation. The people that are calling for 0.75, let's say the Fed comes out and delivers a 50 basis point move. Their expectations, and again, they made trades and allocated their portfolio based on their expectation that it was going to be a 0.75 point rate hike. If the Fed only does 50, they are going to have to reprice. They are going to have to go out and say, oh, we got too negative. We shouldn't be this negative. Let's go out and cover shorts and go long. And if, let's say, all the people that are expecting 50 basis points, let's say it does come out at 0.75. All of a sudden, they're like, oh, we're not bearish enough. We need to reprice everything and make movements. So a week ago, I would have said we're going to get 50 basis points, and I don't think much is going to happen off of this meeting, because when the central bank meets the expectations of the market and they meet in the middle and everyone was on the same page, there's usually no movement or very little movement. Now it's setting up for a big, big move. Ankit, what are your thoughts on the Fed meeting this Wednesday?
Hey, Rob. Well, I think Fed is definitely has a lot of work to do here, because I think as the inflation is clearly putting a lot of pressure on the central banks. And in the past, what we've seen is where they always take a bit of a easy road or try to like balance out and not freak out the markets. But I think at this point, the Fed is a lot under pressure here. So what we have seen from other central banks, that they are not hesitating to raise rates more than expected. We saw that from RBA now with the last two meetings. They actually raised rates more than expected. So I think we have to start to look for these surprises as these central banks announcements comes out. And if the inflation numbers are running hot, I think we need to start planning for those kind of surprises, which again, will create a lot more bigger moves. So as we go into any central bank meetings, I would say right now it's better to be bullish than bearish. Again, there's only a handful. I can just say that there's only Bank of Japan right now that are staying as dovish. The S&B a few weeks ago came out and had some hawkish comments, which helped the Swiss franc to go higher. Right now, all central banks are following the same path. So there's no advantage of one over the other. The FOMC raised rate by 50 basis points, so did the RBA. So I think we have to see a bit of some central banks that might take a more of a hawkish approach. But we are in this cycle where the inflation is a sticky topic, and it's not like last year where things were kind of get pushed under the rug here. I think now it's more on the surface, and we could expect some more hawkishness from the central banks here. So I'm very excited and interested to see what happened on a Wednesday. But like you said, market now needs to price in the 75 basis points rate hike instead of a 50, and that's going to keep the markets under pressure. That's going to keep the dollar higher until Wednesday. And again, we'll see what happened on Wednesday. The statement is really what we're looking for, the forward guidance. They can raise rates, but we need to look at the guidance and say what their expected path is. And I think that's where we will get that big follow-through moves. And if they stay hawkish, I think the move's likely to continue on.
Thank you so much. Let's talk SNB policy statement. You can go ahead and sleep through this one. They said some stuff about 6 weeks ago. SNB President Jordan said that they were going to move if needed and move aggressively. We'll see. There is no expectation for a move, and typically we don't really see much of a move off of the SNB statement. However, I do think that the Bank of England report is going to be good, because the market's only expecting 0.25%. So the market's expecting 0.25%, and I think there's some people out there that are maybe looking for a 50 basis point move. So again, whenever people have different expectations than what the market is pricing today, when the news comes out, there's likely to be big moves because of, hey, we got to reprice our expectations. If we do get a 50 basis point raise, I think that the pound that has been selling off lately is likely to get a pretty big bounce. If we only get a 25 basis point raise, I think what the market is looking at, and the reason why the pound has been weaker lately, is that it is not raising rates as aggressively as all the other central banks, which is going to be a penalty to the pound. So I think there is some good movement to be had off of the Bank of England report. So basically, lots of central bank reports. We have a few little economic reports. We got Aussie employment report on Wednesday night. Other than that, it is all about central banks this week. So let's take a look at the currencies one by one. I'm going to run really quickly through cryptos because we have been crystal clear on our outlook of cryptos. It's a -3 on Bitcoin. Bitcoin Cash is a -3. On Ethereum, a -3. And on Litecoin, it looks the worst. It's a -3. It's so bad out there. It's so bad out there that it's just, don't just stay away. Let the knife hit the floor. We'll pick it up when there is a bottom. Right now, I wouldn't even try. If someone said, Rob, can you please give me what your target is in Bitcoin? I'd say, no, I won't, because I'm picking a random number. There is no support or floor here for these. So let's focus on Forex. This week is definitely going to be all about Forex. So we had this big pullback in the dollar. We had this big run and breakout. We had a big pullback. And you can see that pullback brought us down to the 50-period moving average. And that held really nicely. Now we spent about a week there, not really going anywhere, but the last 3 days, you can see that we are back on the march. Velocity all looks good. So the dollar at this point is a buy. What will happen this next week? Of course, we always have to make adjustments as currency traders. But right here, right now, dollar's a buy. Taking a look at the yen. The yen is looking terrible on a trend score, but strong on a shorter term velocity score. As long as the market stays under pressure, the yen is likely to get some buying into it. So take a look at what happened at the first part of this week. When the markets were under control and, just a normal market, not falling 2, 3, 4% a day, you know what? The yen didn't do well. And then when the market really fell apart, it got a little bit of a bid. Not much, but a little bit of a bid. So I don't like yen here. I think, look, if someone had a gun to my head, said you have to trade yen, I would have to go long yen on a very short-term basis because the velocity is there, the market conditions are there. But do I want to really, hang my hat on the yen that it's going to be the strongest currency? Absolutely not. So for me, yen is I'm just going to be a spectator of yen. I'm not going to try to trade it. Now, once the markets do find a bottom, so let's say that the markets are weak Monday, Tuesday, the Fed comes out on Wednesday, and the market bounces big on Wednesday. I'm absolutely back on board with short yen once the velocity score gives me a signal. What do you think about that call on yen, where you basically, you really can't trust it to the long side on risk off right now, but when we have risk on, I think it's a definite short. What do you think?
I agree. I mean, if we just look at the recent activity and look at the past, we got that big rally in the markets towards the end, middle to the end of the May. And you can see that the yen start to bottom out a little bit before that, but then we actually seen the rally that happened in the yen was not really as much correlated, but it just followed its own relative trend of weakness. It seems like we're kind of getting back in the same zone over here. Yen is extremely negative, extremely bearish, and every time we get this extreme readings, it's due for a bounce. I think these bounces, whenever that happens, we just want to get out of the way when the bounces are happening, and then when the bounce is over, and then that's the time to kind of resume the short. So right now, when we take a look at the price action, it's just a little bear rally to me. So every time we get a bear rally, we get shorted into. So I think for yen, there's no change that I'm expecting because the Bank of Japan is still remaining very dovish here. And until there's some sort of policy change, I think the yen likely to stay under pressure. So any bounces likely to be sold. But when those bounces happen, I think that's a good moment to kind of take a step back and say, let this little short-term movements ride out before I want to jump back in again.
Totally agree. And don't trust the yen bounces. Usually that was such a easy call to make. Markets are falling apart. Just go buy yen. It was a no-brainer. I don't think you can do that here. I think you want to look at buying dollar or CAD. On to the Swiss franc. You can see 0 and 0. Again, this is where the Swiss National Bank Jordan came out, said that they're going to defend against inflation. It ran up, and then it was not able to prove that there was any gas behind it. In fact, it just simply fell back down here. There's nothing going on here. And take a look at velocity score. If anything, this is more of a low base than anything, but we've just got a 0 on Swiss franc. So no reason at all to look to trade Swiss franc this week. Euro is very unappealing as well. We've got just this really lazy, very, very lazy uptrend. There's not a lot of money to be made in this kind of trend. And frankly, it's just moving averages are flattened. There's just no reason at all to trade it. Short term, it's negative. Short term, it's negative, but I don't see any reason to trade euro here. Let's take a look at pound. Now, the pound tried. This week, the pound was at a -2 early in the week. And then the pound had 4 really good days. And I was like, oh, wow, the pound is coming back. Maybe the pound wants to go higher. And then Friday came and boom, we just went right back down. Look, it doesn't mean that this pound is the worst thing ever and it's going to be in a big fall, because right now you can see it's really just in a range. It's trading between a range. The velocity is pretty steep on the downside right now. I assume we're going to come down and touch the bottom of this range. And if we're at that point on Thursday and the Bank of England only raises a 1/4 point, you can absolutely be short pound at that point. And frankly, there's no really great looking short currencies right here. The pound is actually at the top of my list, and you can see it's not ready to go yet. I've got a 0 and a -2. I need that trend score to break. I need this support level to break before I really say that pound is going to be trending. CAD looks great. We had a strong first part of the day. We had a down day on Thursday, and then we had basically the sell-off and then a rebound on Friday. So +3 and a 0. So we're just waiting. We're just waiting for this EMA to steepen. We're waiting for this RSI to start making some higher highs and higher lows. That's all we're waiting for on CAD. So the CAD is bullish, not ready first thing on Sunday, maybe Monday, maybe Tuesday. Aussie's been a mess. The Aussie has tried its best to strengthen. I mean, I take my hat off to it. It's tried to do what it should do. And over the last couple of weeks, it's like, oh, yes, I can do it. I can do it. I can clear out of some of these ranges. And then we just get this really strong risk-off move. I feel that the Aussie was on its way to becoming one of the stronger currencies. The problem is it cannot do that in the face of a falling stock market. It just can't do it. So I think if the market bottoms out and the market starts to become more bullish, I really like the Aussie. But until that comes, it's just on the shelf. I don't want to really short it here. There's better shorts out there, but I don't want to go long it either. The Kiwi has underperformed the Aussie. You can see here we've had a bear rally and it's starting to just turn back down. This is it's really at this inflection point where it could very quickly go to -2 and -2. It's not quite there yet. But I do like Kiwi on the short side. When we look at all the currencies stacked up against each other, you can see a whole lot in the middle, like a whole bunch of stuff in the middle and then a whole bunch of stuff on the edges. And so it makes it very easy when this happens. It tells you, hey, dummy, just look at dollar yen and CAD yen. That's your trades. That's your trades at the first part of this week. Now, again, this is our trend score, which is looking out for the next, 3, 5, maybe even 3, 5 weeks, maybe even 2 to 3 months out. This is kind of the longer term. So this is really telling you longer term what's going on. Let's take a look at the shorter term velocity score. And you can see that it's telling us that dollar is trending nicely and it is having a nice velocity. So dollar is number one as a buy for the first part of next week. We talked about the yen showing some short-term velocities to the upside. So you do not want to short yen here. Let that thing run. And when it tops out, which is probably going to coincide with when the markets bottom out, that's when you want to be short yen. But you wait for this to swing back down to a negative velocity. The pound is probably the best thing on the board right now to short. It's not great, but it's probably the best thing on the board. So if we really take a look, what do we want to trade? Dollar CAD on the long side and pound on the weak side. That's it. There's not a whole lot else out there until we get some changes in those velocity scores. So let's go ahead and pull up the charts and look at some possible trades. So let's take a look at that first one, pound dollar. So here we are. Let's start off on the daily chart, see where we are in the cycle. And you can see we just had a really nice bear rally all the way from 120.170 all the way up here to 126.50. That's a nice 500 pip bounce. It fell down, and then we've recently just spent the last couple days in a base here, and you can see that base just broke down on Friday. So there's no reason to believe that we are not going to see this last low down here at 121.67. So for me, this is the best trade on the board early in the week. Short pound dollar, 123 somewhere in the entry, and then 121.70. And let's be a little less aggressive than that. 121.85. Everything is working on this one. As you can see here, we got a lot of velocity to the downside on a 4-hour chart. So it's just a matter of, do you want to wait at this point? We have spent a lot of energy. Do we want to wait for a bounce? Do we want to wait for base? Or do we want to get in early on next week? Me personally, I'm going to wait for a bounce or a base. That's just how I trade. But I think this is a good trading vehicle here. And then let's take a look at the pound against the CAD. As you can see, it doesn't look as good as the dollar. So the daily chart looks good. The daily chart actually looks quite impressive. We are low basing here, down at a new low. So yeah, this is a tradable, very tradable pair. You can see that once we break down below this 157, then the question is, where is the next low here? And we've got to go back a long time to find any prices. I'm going to stop going back. We are in prices that really have just never been seen before on pound CAD, at least in the last couple of years. So, oh boy, we are at just some major support levels here. So yeah, pound CAD is definitely a very tradable pair here as well. Okay, what are you looking at?
Hey, Rob. Well, I think at this point, dollar crosses is really where we need to pay attention to. And, dollar has made a huge turn. We going back to last week, we were sitting right at the support on that daily chart, and now we gone from a 0 to a +2. So we need to start looking at, okay, where the dollar would do really well with. Dollar Swiss franc has been on my list and has actually done really well. Finding out what's the best currency pairs. This thing has, based a little bit, a nice little breakout. And on the daily chart, we have actually now, it seems like the parity level that we tested back then, it seems like it's reachable at this point. It's in that's what the moving averages is now turning into. So yeah, that's a one pair that I like on 4-hour chart. And again, we have the S&B this week as well. So I think once we establish a direction, look at the beautiful high base that we saw before the breakout this morning. I think once we get the trend established, then what we need to do is just look for either some basing patterns or some pullbacks to jump into. And again, I think the dollar is going to be in the focus, especially going to Wednesday with the FOMC rate decision. I think we can also take a look at yen crosses as well. Rob, if you want to pull up pound yen, just to kind of look at the levels. On a daily chart, we can see that we established a nice little double top there. This is the only yen cross that actually shows a double top. Everything else actually broke out quite nicely. So let's just say that if we do like some sort of short-term pullback in these yen crosses, then we can go into an hourly chart to a 4-hour chart and see, okay, where is, we establish a bit of a trend-changing movement here. So now what I would really like to see is a bit of a bear rally in this pattern where we just establish a lower high And I think that will create a good opportunity. We have been pretty much one way for the whole time, but I love it when I see this momentum changes. And that's what we have. We were holding up for the longest time, and we established a trend-changing move. So in the next, I think by Monday, we'll have to see what the market does. But I think this is where initially I look for a bear rally, and then see if we can establish a lower high, and then maybe turn lower. So dollar yen is another one, Rob, I've been kind of talking about, and we are up against a massive resistance. And this is where, every base, look at the price action. We are just against that level. And I think this is where I would want to see the dollar yen break above that 135 for me to just stay bullish the dollar and not as much go after the yen, because we have that divergence there. As you can see, once we break above the 135, the next level we have is about 145. So there could be once we break these levels, that's where big movements come, and we also get to see some reversals as well. So right now, dollar is still a better play to the upside. But if that's supposed to change, let's say if the yen start to become a better play on a reversal side, then we would need to see a bit of a change as well in this pair. Until then, I think it's pretty much one-way deal, but looking at all the dollar crosses instead of the yen crosses. But outside of that, Rob, my focus this week is going to be Australian dollar as well. This week, Australian dollar had every reason to rally, and I'm talking early in the week where it did not catch a bid after the surprise rate hike. So Aussie Kiwi is the one that I would like to kind of talk about, just to see the correlation there. As you can see that we broke that resistance, and that's again a massive resistance level as well. It did break above it, and you can see on a Monday it caught a bit of a bid there, and then here it is reversing a little bit. So if it gives up this breakout point, this is again an indication for me. Let's go with the Kiwi on the longer side instead of the Aussie, because that's where we'll start to see that kind of shift a little bit. We have been net Aussie long over the Kiwi, but that could come to a change if this Aussie start to underperform against the Kiwi. So this level I'm paying close attention to, and if it falls below it, then we can go back to 109.50. For that, I like the Aussie dollar, and just to make those pairings correct. If the Aussie seems to be weaker, I want to be Aussie dollar short than the Kiwi dollar short. And again, same thing. Look at the resistance. Look at the rally that we had since the bottom of May, which again coincided with the bottom that we saw in the equity markets too. So now what we need to see, exact same thing what we saw on the way up. We need to see these exact same thing on the way down, where we actually make a lower high and a lower low, make some basic patterns in between. But as you can see, we just broke that parabolic, we are right there. The moving average is actually moving lower. I do like this establishing on not only just a daily chart. Rob, it would be interesting. Just take a weekly chart on this. I really like the way the technicals are set up. We got that nice 3-week rally. Again, we broke that new low back in May, and then we had this bear rally. As you can see, that bear rally, this is a very important level of support on this pair. So I think we do have further downside if this can start to decelerate fast. But these things have been holding up. But when we see that moment when they do start to weaken, I think that's the time to get active on these currencies. So Aussie will be on my top of my list going to next week. Back to you, Rob.
That's a great rundown of everything, Ankit. Let's wrap this up. The equity markets are likely to remain under pressure. Crypto's likely under pressure. So again, we have this big risk-off move, and dollar's performing well, CAD is performing well, and yen short-term is performing well. Expect huge moves this week, especially on Wednesday. And you need to understand that on Wednesday, there's going to be fireworks. There's going to be big moves because half the people are expecting 75 basis points, the other half 50. Whatever gets picked, some side is going to have to unwind positions or add on positions. There's going to be big moves. And understand that if you're playing on Wednesday, specifically dollar crosses, you're playing with fire. Now look, don't let me scare you away. You can play with fire. We all have played with fire, but when we do play with fire, we know we're having risk. and we do things to mitigate that risk. So if you're going to be trading Wednesday, just understand, hey, I need to do all the things that I do to mitigate risk. I've got to take positions with a very wide stop. So I'm going to take a very small position size at first with a very wide stop. Or, hey, you know what? Let me take half of my position down before the Fed meeting, and I'll put the other half back on if I like the outcome of the Fed meeting. There's lots of things that you can do to downshift the risk around these news reports. So FOMC is a huge deal. So we're going to be doing an FOMC preview on Tuesday. We will be recording this, so if you can't join me live, then we're going to go ahead and just record it and send it out to get everyone ready for the FOMC. We are going to be having our midweek update 30 minutes later than usual, as we do when the FOMC meetings are out. So instead of 1 o'clock p.m. Eastern Time, it's going to be at 1:30 because we want to be able to trade through. We want to have our session through that FOMC report so we can all trade that report together. And then on Thursday, we're going to do a little session on bond yields and Forex and how they all work together, because right now, bond yields are really pushing currencies around. And this is one of the biggest correlations right now is what bond yields are doing, and we'll do a session on that on Thursday. Everyone have a great summer weekend. Be safe out there, and let's come ready to trade next week. Bye, everybody.